best wealth management business in the world. $300 billion in new money this year. What is happening that people can bring in $300 billion in wealth management?
Yeah, it's amazing. I mean, the team's done an unbelievable job. The reality is we're managing, over 4 trillion, nearly 4.5 trillion. And with success comes success. We have a lot of clients who feel very comfortable with the brand, the platform, the technology we've invested in through E-Trade. I mean, it's all come together. This has sort of been our dream for over a decade. And finally, we're seeing the fruits of it. I mean, 12 years ago or so, I think our assets were about 500 billion. So they've gone up 8-9 times in that period. And as you know, this is very sticky money. It's a great business, so we're thrilled.
Well, that's what I wanted to talk about. There's at one point, Morgan Stanley, before you came in, had what I regarded as episodic earnings. There'd be good and then bad, and good and then bad, and therefore it's very hard to give a price earnings multiple. The business that you're bringing in, including, by the way, E-Trade, is really sticky and steadily growth, secular growth. And I'm wondering what you, when you sit around in your board meetings, doesn't someone say, you know what, how come we're still at 12 times earnings? Because this is a secular growth story. It's not cyclical. I'm trying to understand why you're not given a greater price to earnings multiple.
Yeah, well, it's getting there. I mean, to be fair, we were sub 10, and I thought that was just nuts. We're now managing, if you put wealth and asset management together, which give us the ballast, that's about 6.5 trillion. On that, we're generating revenues of over 30 billion. That's very sticky. But on the other hand, the investment bank and what it's done, the resurgence of fixed income after it was restructured dramatically in 2015. Equity's number one. The investment bank itself and M&A is on fire, the equity underwriting. So, Jim, it's this ballast and speed concept that I've talked about. And, we're starting to get the multiple. I mean, we're getting the recognition. You look at some of the other pure wealth players in the marketplace, they're trading at, 20, 30 times earnings. We'd love a piece of that. And I think our investors are starting to understand that. So it's getting there.
Well, I think it is. I mean, if you added buy now, pay later, I guess we get 30 times earnings.
Yeah.
I'm always struggling about the love of Robinhood and how important it is. And I want to stack that up against you, and I want you to include a company that you bought. At the time, it was called Solium, but it's a company that you've made into ShareWorks.
Yeah.
Who has a younger investment base, and whose base is larger?
Well, first, I have a lot of respect for Robinhood. I mean, what they're doing, introducing a lot of young investors to the marketplaces. I know you've said this, and I believe that's a good thing. And as long as they're prudently investing, they understand the markets go up, but they also go down. Then they've got a real winner. So a lot of respect for what those guys have done. But we've sort of done the same thing, but we've done it within the Morgan Stanley platform and brand. So maybe it doesn't get that kind of recognition. Solium's a technology company. I mean, that's basically 300 programmers. That gave us an opportunity to get into the workplace space. Between Solium and E-Trade and our existing business, we're touching over 13 million households, and they're wealthy households, right? There's significant money. And by the way, they want to borrow, and they want to park their cash there. They're taking out mortgages. So it's got multiple verticals that we can go after to help these people find financial stability. And that's what I'm really excited about, is the combination of the traditional advisor model, the E-Trade direct model, and the Solium E-Trade Morgan Stanley workplace model, where you're getting people at work, you're getting them online, and you're getting them through an advisor. And that, to me, is the magic mousetrap.
James, it's David. I'm looking at your stock price, which is not doing much of anything right now, and I'm wondering, is it perhaps because people think when it comes to capital markets, this thing just can't keep going at this rate? You pointed it out, of course, whether it's fixed income or now equities, the outperformance of expectations, the percentage gains year over year from 19. I don't know if you've ever seen anything like this in your career, but can it continue at this rate?
Oh, sure it can. And listen, the market, I don't have a problem when I see the market if our stock is at $100. I don't know. Can't look at the screen right now because I'm looking at your camera. But we're at or about that. We were $50 a year ago. The stock was up 34%, I think, in 2020 during COVID. We're up 40+% this year already. I mean, it's the market cap is over 180 billion. It's had a phenomenal run, but there's a whole lot more to go. I mean, if you take that thread that Jim was pulling on about the multiple expansion, and you take the fact that we've built these enormous businesses that have huge scale advantages, and to operate on a global basis, as you know, David, in M&A and capital markets, cross-border stuff, that's not an easy lift. You don't just turn up one day and say, that's a business I want to be in. You've got to build that over decades. So I think they're incredibly resilient. The share gains that we've done through the institutional side under Ted's leadership, have worked out great. And I think it's going to keep going. I'm really positive on the story.
You do.
We can't control, obviously, the broader market environment.
No, but we watch, we're here at the New York Stock Exchange. We see the listings happen. For a long time, it was Chinese companies. Then it was SPACs. Now it's just straight IPOs. That's one part of capital markets activity. But you really expect that that you're going to maintain these kinds of growth rates when it comes to equities and/or fixed income for the next year or two?
Well, we're not going to compound at this level. But look at some of the other things going on. You've got global GDP growth. In pretty much every major economy in the world is going through global GDP growth. We've got enormous fiscal stimulus. We've got record low interest rates. People want to transact. You've got the move from commercial lending to capital markets across all of Europe is still in the very early days. So, I'm not uncomfortable in saying we clearly have a growth platform out there. Whether it will be at the level we're seeing right now in M&A, obviously not. Our pipeline suggests that's with us for a while to come. But that's not going to be, over the next 5 years, we're not going to maintain that kind of growth. But the resilience of the model, the scale advantages, we've got the efficiency ratio now under 70%. All these things are real. Then when you double the dividend, which we did, you're giving investors, a 2.8% yield at $100. That's not for nothing, right? And you're buying back about 3% of stocks. So investors are getting a return of 7% before we get any of that growth.
James, one of the headlines from the call was about crypto, where you said it's not a huge part of the business demand from our clients. Is that because it's early days? Do you expect that to change?
Carl, I've said this before. I think crypto, it's not a fad. It's not going away. And obviously the blockchain technology supporting it is a real innovation. We're not seeing among very wealthy clients, they might put, I talk to people, maybe 1% of their portfolio in it. Nobody's putting 10% of their portfolio into it. So it's an interesting thing. A lot of people want to participate. They don't know how crypto is ultimately going to play out. I see, Bitcoin this morning, I think it's trading, 55,000, knocking on 60,000. So a lot of people made a lot of money on it, but it's not a core part of their diversification strategy. It's an option that they're playing out, and with very wealthy people. Now, with some of the younger folks, it's different. They've got less money at risk, and frankly, at their age and stage in life, they can take more risks. So you're seeing more interest at that level. E-Trade had much more interest than the traditional Morgan Stanley client base.
That makes sense. James, you have drawn a line in the sand when people coming to work, people showing up, being able to judge someone as a first-year associate, second-year, third, very traditional, and I've always felt very right. Pushback? People think that you're wrong? People not wanting to go to Morgan Stanley versus other places? What is the culture right now on this issue?
Yeah, I don't think there's been a decision I've made that I haven't had some pushback. I tell people you don't get just the good bits of being a leader, you get the good and bad bits, and some of it is people don't like it when you make decisions. And by the way, that counts for everything, from what you put in programming on the show to, what's going on in politics. So that's okay. I can deal with that. And, fundamentally what I said was, and, the quote I used, which got a lot of attention, was if you can go to a restaurant, you can go to the office. What I didn't say, Jim, was, and you've got to be in the office 5 days a week forever. Right. Clearly, we've moved to a more flexible work environment, but we'd like to see people in and around their colleagues at least several days a week. That's how we do our best work. That's where our best innovation happens, from bringing people together and training and developing them. It's okay for me working from home. I'm at the tail end of my career. For the kids who are 25, they want to be in and around and learn from the seniors. So again, we'll be flexible, and we are being flexible. But we still want to see you in the office some of the time, job dependent, etc. We've had some folks, as you would imagine, on the trading floors. They've been in 5 days a week from the get-go, and that's what their job demanded. Client-facing people have to do what the clients want. So we'll be flexible, but we're certainly intentional. I think it's very important to share your learning and development skills with the young kids.
Yeah, I think there's no doubt. I do sense frustration from some of your peers, James, though, in terms of people not showing up on Fridays. And yet knowing at this point, as you say, flexibility is part of the allure for other employers and seems to be something that you simply have to provide regardless of whether you want to. Do you agree?
I don't know. I mean, David, you know, it's interesting. Some of the early companies that came out and said you can absolutely do whatever you like in terms of working, they've retracted from that. I mean, it's not every employee gets to choose exactly how they work in the same way they don't choose how they get paid or when they get promoted. There's got to be a balance in this. So you're not going to please everybody on this topic. What I've said is between now and the end of the year, we're still in the category of what can we do from a health and safety. In New York City, for example, we require you to be vaccinated to come into the buildings. Guess what? 96% of our employees are vaccinated, and they showed us their attestation cards. Other parts of the world, they're not even open. You know, Australia, where I grew up, I mean, they've barely opened the economy up yet. They're still, you know, in lockdown phases in different parts of the country. By 2022-23, then we'll really see what the right model is by business group and then by individual.
Well, I've got to tell you, James, the stock is down, which is a rare opportunity because this was a great quarter. My Travel Trust owns it. We talk about it a lot when it comes to the CNBC Investing Club. And I just can't thank you enough for coming on and explaining why your bank is different and positive and I think much better than almost everybody else in the industry. James Gorman, CEO, Morgan Stanley.
Thank you.